Hello everyone, welcome to Smart Investing. Today this video is going to be about the banks, also known as the banking related services. So actually it's banking services related sector. So I'm going to jump right into it. First stock up is INDB, Independent Bank Corp Mass. I'm going to see if this is a good selection to add to a watch list or not. First page that we have is all this. Gonna look at all that. So market cap is at 3.83 billion. So it's not too small. 52-week high and low. High of 93, a low of 73. So that's actually pretty good of a spread. PE ratio is at 22. Earnings per share is at 3.7. Dividend is at 2. Dividend yield is at 2.45. Now, let me see. The shares, looks like not even a million shares are even bought. So we're using the difference between these two, and it doesn't look like a lot of shares are being bought for this stock, even though it's at $83.43. Volume is at 322.76, so that's pretty active. So now I'm going to look at some technicals here. So it looks pretty flat on the 5-year, like obviously until 2020 went down, then went a little bit higher than what it was supposed to be from pre-2020 and pre-COVID. So I mean it's only jumped up let's say about, let's go from 68 to like 80. So a minimum of at least a $10 range for the year, which ain't bad because that usually produces a really small uptrend. And then as you can see here on these lines here, and that confirms it, that it's a slow uptrend. So we're going to look into the year. Now for year, it looks pretty flat. There's a lot of chops here. See up and down movement. There's a lot of chop. But obviously from the start of 2020, it has been in an uptrend. But prior to 2020, it has surpassed its highs pre-COVID. So that's a good sign. But overall, it just looks flat this year, which ain't bad, but it just needs less volatility, and it needs to have further confirmation as to what we're going to do as for next year. Last 3 months, it looks like it's on an uptrend, but there's still a lot of chop. So there's still room for this to go down. It's just a lot of chop, mainly. So overall, for the chart, I do not like the technicals. And now we're just going to move to the quants. So we have here, highest rating is growth. I can see why, because it's pretty active. The stock is not pretty cheap. And then the market cap is at 3.83 billion, almost a $4 billion company. So it's a small cap, but not too small. I think small enough to survive. Now we're going to look at the financials, and then we'll look at dividends. So Q3, they reported a beat, and Q4, it's going to have a slightly higher recommendation for its estimates for Q4 2022, and we'll see in the next 3 months where that ends up. So, gonna look for the annual estimates if they have any. So it does. ROE has gone down from 2019 and from the high of 2018. So return on assets again from 2019, 2020 and 2021 for their earnings. So weird part is you would think everybody did really well in 2021, and for this company they did about the same as in 2020, and 2021 was like a monster year. So I don't know. Doesn't seem like this company's on track. So it looks like they lowered debt from 2019, and then it went up in 2020, then went back down in 2021. So they're up and down with debt. So I mean, it seemed like they were trying to pay it off, but they should have continued that. So I don't know what the situation is, but they need to get back to it. And then again, for some reason, people like this stock. Very few people. Maybe it's a firm or something, but who knows? They've been flat and volatile, which is not a good sign for the overall trend. But who knows? The price is still more than most banks. Cash flow per share. So it looks like they're since 2020 they're on an uptrend, trying to reach back to the previous years of their cash flow, and we're gonna look at the reserves. So the reserves are their strongest. So it looks like they're putting money away, but not putting it to work. We're gonna look at their assets and stuff. So net income has really remained about the same for 2021. It's not showing me revenue or operating. Now we're gonna look at some cash flow. Cash flow is at 190 for operating, negative 63 for investing, and financing is 816. So they are well equipped for cash flow. I think that's why, you know, a few companies like it. So basically, I can say safely between 25 to 33% of the company is all in cash. So that's a pretty high margin to have like almost a third of your company in cash. It looks like they save for a rainy day. I think that's why people, and then obviously they're paying dividends. They can definitely pay rising dividends. I'm gonna look at that. So from 2020, did they have a cut? And no, they did not have a cut. But they were paying 46 cents. And then in 2021, 48 cents. So that was a dividend raise. And then for 2022, that was another raise, 3-cent raise. But overall, it seemed like they have not cut in at least 5 years or more. So that is a good sign. So for this stock, again, the volume is at 322K. So yes or no, if this stock is good to add to a watch list. So the technicals, I said no. And then the fundamentals were pretty good. And then for the quants, the best rating was the growth. It's hard. I mean, it's a good company. It's just that it's not following the overall market as of right now. So, in order to, avoid those losses, especially for this year, um, it's just not a good time to invest in the company, but it is a good stock. So, I am gonna say yes to this stock for a watch list, but not a good time. And this is a stock to hold on to in your watch list. I mean, for months and months and months and see where it goes, not for the short term. They seem like they're trying to do better. It's just that we're in a rough market, so it's not the time to um chase volatile stocks. So next stock up that we have is RNST, Renaissance, because there's no U. The major index they follow is the Nasdaq. So at $34.53, they are a market cap of close to 2 billion. 52-week high and low of 40, low of 27. That is a spread of about 13. PE ratio is close to 13, slightly undervalued. Dividend for the year is at 88 cents. That's horrible. Definitely not an income stock, even though they pay dividends, but it's too low. EPS is at 2.67, rounded off to 2.7. Free float is at 54 million. Shares outstanding close to 56. So over a million shares have been bought, but less than 2 mil. So it says the earnings will be expected actually in a few days, 2 more days. Looking at the chart, looks pretty flat, lower than 2018 highs and the highs from 2021. Now looking at the 1 year, try to fight back, and it is holding, but from let's say about August, it's been flat. I know 2 months doesn't seem like a long time, but if you're trying to, get in and out of this trade as a short-term play, it's hard to do so because these drops just go by so fast. See, drop, and then we'll see where it goes from there. But it will have to beat its highs and hold on to that. Looks like that's what it's trying to do, but who knows? So analysis part, highest rating that is given is a value. So saying that it's a good price for this stock. 13 PE. So it looks like they've beaten their earnings last 4 quarters, which is good. And then I'm gonna look at the estimate here. Estimate is really high for Q3. So let's see the annual estimates and indicators. So ROA, these are really low margins at 1%. ROE is at 8. Earnings per share for the year at 2021 was 3.11, highest it's ever been. Margins, it's not giving me anything. Debt is in the high 80s, so 87. Cash flow is at 2.5. Not beating its 2019 highs, but close to it. Cash reserves about the same. Net income is higher than the last 5 years. And obviously revenue and operating income is not going to show me anything. So we're just going to move on to the cash flow part. Operating cash flow 142, investing negative 660 million, financing at 1.76 billion. So definitely cash flow positive, and you can say safely that most of this company is in cash. It's in cash. And you can see here they have not paid a raising dividend since 2019. And the raise was only a penny. I don't know the percentage for that. Just for a penny. But again, the dividends have stayed flat even until this year. So that's 5 years of no income growth. And as well as the capital appreciation, you pretty much remain flat. So it's pretty tricky. This company's all in cash, uh, but it seems like they haven't made any investments either. So maybe they've been saving cash on the sidelines for a while until things get worse. So for this stock, uh, I'm gonna say yes. Can add this to a watch list. And again, just because it's added to the watch list doesn't mean you have to make a decision right away. Again, these are just recommendations as to what I think are good stocks and what are not. So again, I can only recommend stocks to add to a watch list. Next up is BRBS. And this stock is pretty choppy. And it went from late 2020 from $13 to around 22. Stock is really cheap. Doesn't seem active. I mean, awful numbers. 52-week high and low. Market cap is at 246. PE ratio is a 6.5. Dividend is at 49 cents. Not much of a capital appreciation. Moving on to the quant rating. So for the value for your pricing, it's saying that's a really, really good price. So it's telling me. And then for all the other key indicators, we're going to go through that. And now ROE is at 27%. That is really, really high. Earnings per share is at 2.93, close to a 3. So they've earned the highest they ever been was in 2021. Debt is close to 90, coming in at 89.6. Cash flow is at 3.15, better than pretty much all the years before that, before 2021. So I look at stuff like that, when the market is up so high so fast, I look at that as a bailout, you know. So cash reserve, about the same, slightly less than most years. So I would expect, if they are positive, they're very narrowly beating it. Again, I don't have a certain number to say. Uh, if they beat this number, then they're doing good on cash flow. If they're going below this number or criteria, then then dismiss it. Again, I can't provide that. It just depends on the company, market cap, and all the numbers involved. So again, it just depends on everything for the evaluation. Net income is highest it's ever been at 52 million. It's not giving me the rest of the info. Balance sheet is at 89%. So now we want to see if they cash flow positive or not. So 52. So they're cash flow positive, but barely. So about 9 million in cash. It seems like they can afford the dividend, but the main thing is too is that um, when a company is negative in cash flow, uh, it's not a good idea to use the net income. I mean, it helps, but it's just not a necessary thing to do. It's better to use your cash flow to cover expenses and everything else, and because eventually, if net income can't support the expenses, one or the other, either net margins and net income, or your cash flow can't provide it, then there's not much you can do to stay positive, unless just got to get rid of debt. So looks like they made a dividend cut in 2021. So we see here in 2021 four payments, so it went from 15 cents to 12 cents. And that was back in mid 2021. And they have the same payment for 2022, which was 12 cents per quarter. And it looks like they made in 2021 split ratios, and in 2017 as well, a 3:2 split ratio. That's pretty frequent. 2017. So it might help the stock. The reason I say might, because some people might feel a certain way about it. Some people might like it. Some people may not. I guess people who do own shares, it benefits them. Even though they have less ownership but more shares, it might benefit them. But either way, uh, you know, might just do the job. So for this stock, I'm gonna say no. Too many negative factors coming into play. So we're gonna leave it at that. Next one up is FCBP. And this stock has no volume. It's weird. So dividend at 1, 52-week high and low. A difference of $11. So looking at the chart, hold up. Looking at the chart, the last it was traded was last year, 2021, and it started to go down actually. So this stock is actually delisted. So we can skip this stock, and it's not even worth mentioning. So this stock is delisted. Delisted. I don't know if they got bought out or what. Oh, so it says they are now under EFSC. So there you have it. They've gotten bought out or whatever, or acquired. I'm not gonna look into that, so we're just gonna skip on to the last one. Last one up is Western New England Bancorp. Look at the chart. Uh, looks pretty flat. I don't like it. It looks like it's sort of more to the downside right here slightly, and then it went flat. So it hasn't picked up ever since, let's say, around August. It went up for July, and then after the dividends, that's when it just shot right back down. So far, I do not like what I see. Market cap is really, really low. 52-week high and low, awful. Earnings for 1.0. It's awful. Dividend is at 25 cents. That's giving most of your money away. Seems pretty awful. Estimates, it looks like they're on par, on target with their estimates, which is good. But as for Everything else, its highest rating for the quant is saying value, which was 8.4. So the price for this stock is telling me it's really, really good since it's very undervalued. And I can see that just by the PE. So you just want to look at the financials real quick and then we'll move on and end this. So as for the key indicators, we have here ROA. Then we have, I like to compare it to the last 5 years since I don't have like all this information in front of me. I just compare it to see how they do and think about the overall market conditions from previous years. So ROE, they have improved for 2021. And then for their earnings have improved in 2021 beyond, doubled so many previous years when it comes to the earnings per share. Margins, I would expect they're getting higher margins. The debt is slowly increasing. The cash flow, better than most years. And the cash reserves are less. So they're slightly using their cash more somewhere, somehow. And we're going to look at the cash flow. As you can see here, cash flow. So operating is positive. Trying to see. So 17 million just in cash flow, and market cap is on 187. Dividends per share for this year is at 6, and then previous years we've been given 5 cents, and then in 2018 that's when they went from 4 cents to 5 cents to start off the year in 2019. But again, are they growing dividends? So in 2020 they remain the same, 2021 they remain the same, and that's when in 2022 they start to pay it 1 penny more. It's not much, but overall something is something. So for this stock, too many negative factors. So for this stock, I'm gonna say no, 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 and that's about it. So those are the 5 stocks. I'll make a shorter video, make a shorter version. Thank you guys for watching, and I'll see you guys in the next one. So before I end this, please like, subscribe, or comment if you would like to. If not, then stay tuned for more videos from me. Thanks.